Hey all, welcome to ShareTech. This is Sunday and I'm here with a video for you. This is not going to be CRISPR. There is no mention of CRISPR anywhere in the video. But I hope that you would stick around and watch this to satisfy your intellectual curiosity, because today I'm going to talk about a chart pattern that has formed on the gold chart over a period of 8 years. And that pattern is called as a cup and handle. The entire cup was formed over the 8 years. Past 8 years, and the handle is now in the process of forming, and it has reached the stage where I suspect that it might take off. So I'm going to discuss the cup and handle pattern theory. What constitutes a cup and handle pattern? How do you find out the target price at which the commodity will end up if it was in a cup and handle pattern? And we are going to calculate what could be the price of gold when the spike happens based on this cup and handle pattern. I'll also talk about a ballpark time frame within which this is going to happen. So if you're interested, please stay back and let's get started. Today we have an interesting exercise. We are going to test the cup and handle pattern. So let me lay out the theory first. Okay. First, let us talk about the duration of the cup. Generally, cups formed over a longer duration and which are more shallow rather than strong V bottoms provide a much stronger signal. And it's a bullish pattern. We need at least a 6-week duration for a cup and handle pattern to be meaningful. And in this case that we're going to talk, it's a way longer, formed over years. If you look at this chart behind you, chart for gold with candles that are 1 month each of those candles is 1 month, and the cup was formed almost over 8 years, starting from 1st of October 2012 up to July 2020, when the handle starts forming. So the cup is completely formed by July 2020. Therefore, in my opinion, this should be a very strong pattern. So it will take a little time to break out because those candles are 1 month each. So you can imagine a month at a time for it to break out upwards. And this is going to be a strong break in my opinion. So let's talk about the next factor, which is the depth of the cup formation. As I mentioned earlier, it should not be very deep. And in my opinion, this is not a very deep cup. When you look at the width of the cup and the depth, it is not looking so deep. And also the handle should remain in the top half of the cup pattern. And so far it has remained in the top half, and you can see that it's now turning upwards. So the third factor we have to look at is the volume. The volume should decrease at the base of the cup, and it should increase as the price starts going up. So that is the other aspect that we have to look for in a valid cup and handle pattern. So we have, in my opinion, sorted everything out here except for volume. Unfortunately for me, if you see in the chart, you can see that the histogram at the bottom, which shows the volume, does not go all the way back to the last 8 years. It just goes back for the couple of years. So we do not have the complete data. So we have to make an assumption, and I'm going to make an assumption here that the volumes at the base of this cup was below average, and therefore it meets the criteria of this theory. And if we make that assumption, the next step is going to be to try and calculate the target price, because now we are assuming that the cup and handle pattern has met all the qualifying characteristics that should be there. And here is how we'll calculate the target price. The distance between the bottom of the cup and the point at which the handle started the breakout is to be taken first. And then we add that distance, whatever units are there in that distance, we add that to the point at which the handle started forming. The total of those 2 points is going to give us the target price that we are looking for. So in this case, the difference is $715. If I add it to 1776, which is the breakout point where the last candle stood, we have 2491 as the target price. This chart has candles that are 1 month each. And as I mentioned before, this cup was formed over almost 8 years. So if we were to imagine the formation of the handle and it moving upward with each candle being 1 month, you will see that it's going to take time for the spike to happen, but it's going to be a very strong spike, and it's going to reach us to a target of $2,400 to $2,500 for gold. And I'm going to show this to you on the chart. So let us look at this chart here. And you follow my cursor out here and you will see how we are doing this measurements. I'm going to go across to this scale icon here, and this candle happens to be the lowest point. And if I was to pull it up all the way towards the formation of the to the beginning of the handle, it comes to 1779.45. And if you look at the blue box out here, which says 732.21 and within bracket 69.92, just above my cursor, that 732 is the $732 is the difference between the base of this cup and the start of the handle. Now, if you go to the extreme right of this diagram and look at the side, you will see that I have a number out here, which is 1776.72. If I add 715 to 1763, I would get somewhere around 2480 or something. So I'm saying roughly we are looking at a pattern which predicts a target of $2,400 to $2,500. So let me let go of the scale tool and come to look at the handle out here. So as you can see, the handle has not gone down below the half of the cup. I would say the half of the cup is around 1371.96, exactly where my cursor is. But we are still high up here. So there's a possibility that this may come down again, but it should not go below this half. So I'm going to assume in this exercise that it's never going to come below the half of the cup, and it's going to continue going upward. So if each candle is for a period of a month, you can just visualize the candles going up and down and moving upwards. So ultimately they are going to be at 2,400 to 2,500. Please look at the bottom here, the bottom where you can see the years, because it's a large scale graph. So let me expand this further and bring it forward here. So if you look at this here, every candle is a month, and if we go forward, you can imagine that we will break out somewhere at the end of this year, and I would suggest that somewhere around June we should start seeing the upward movement, and our ultimate target may probably happen a couple of years down the line, and it should go to 2,400 or 2,500. That's where I'm seeing it end up out there. Now the question is, how do we determine how long it's going to take? What is the right way to look at it? So we are going to examine some geopolitical factors I'm going to talk about. Keep in mind all of these, and in our mind we have to look at how each of these geopolitical and economic crises are going to resolve themselves and over what time frame, and the outcome is going to depend on how those geopolitical risks resolve, when they resolve, or if they get worse, and how the economic issues get resolved or they get worse. So the combination of all those. So China is in a situation where they have to reduce interest rates. However, if you look at US, they have to increase the interest rates. So these two big economies are pulling in opposite direction when it comes to the price of gold. Increase in interest rates always has a bearish effect on gold. Decrease in interest rate has a bullish effect on gold. So that's why we're going to look at the rest of the world and see how they are performing. And when we talk about rest of the world, we have to look at some of the bigger countries which are having huge problems. And then we are going to look at the BRIC nations: Brazil, India, Russia, China. So first let us look at Turkey. So Turkey's president Erdogan announced a significant reduction in taxes on basic food, because Turkey is facing strong inflation on food and other aspects, which is eroding the lifestyle. So value-added taxes would be reduced from 1% to 8% on food purchases. His decision will be published in a gazette and will go into effect on Monday. Erdogan said that in addition to tax discount, the government expects food companies to lower their prices by 7%. And he said that these foods play a significant part in inflation, and also, the official data for January showed inflation rose a staggering 48.69% annually. That's a huge number. If you ask the independent experts, they said that the number is much closer to 115%, and that's very staggering. Also on Saturday, the government announced a step to encourage people to bring in the gold that they have been saving. The government said 1,500 gold drop-off locations would begin operations on March 1 to integrate the precious metal into the financial system as deposits. So the government is planning to collect domestic gold. So that is the situation in Turkey. So now, having looked at Turkey and what's happening out there, let us now take a look at Sri Lanka, which is another country which is having problems, not only with inflation, but also with its foreign exchange reserves, which have dropped to the rock bottom at this point of time. So it all started with the coronavirus pandemic, which has dealt a heavy blow to the economy, which depends heavily on tourism and trade. And with the government estimating a loss of approximately around, say, $14 billion over the last 2 years, the tourism industry, which represents over 10% of the country's GDP and brings in foreign exchange, has been hit very hard by the coronavirus pandemic. So this has been a fatal blow for Sri Lanka. As a result, forex reserves have dropped from over 7.5 billion in 2019 to around 2.8 billion as late as 2021. So right now it is much below than that, and the situation has deteriorated further. And with the supply of foreign exchange drying up, Sri Lanka imports most of its goods from abroad, and that has caused a big problem for the government. They don't have enough foreign exchange currency, and therefore the Sri Lankan rupee has depreciated around 8% so far this year. So as a result of this, food prices have gone up significantly, and the government is in a very, very dire situation. The economy is expected to have contracted almost 1.5% in the July-September 2021 timeframe, according to the central bank. And now I think it must be even worse as we are close to almost the end of February. The president said that Sri Lankans abroad who have sent foreign currency back home are a major resource, and that's what is keeping the economy going. And he has urged the non-resident Sri Lankans to send money back to Sri Lanka. So this is the current situation in Sri Lanka. Now let us look at Kazakhstan. There have been demonstrations in every region of Kazakhstan to protest the increase in the price of liquefied natural gas following the lifting of the set price fixed by the government. This lifting of price controls on fuel, which removed one of the mechanisms for redistributing the revenue from raw materials, has kind of provoked the citizenry into discontent. This is more so because the country was already experiencing very high levels of inflation in the wake of the COVID-19 pandemic. It was almost 7.5% inflation in 2020 and 8.4% in 2021 on top of that. In particular, the daily life of the Kazakh people was already affected by rising food prices. Now, on top of it, if you look at the global situation, the trucker strike in Canada and copycat potential strikes by truckers across other countries threatens to make the inflation worse, not only for North America, but other places as well. Real assets in inflation retain their value, and they retain their value by becoming more expensive, because real assets value is measured by money, and when the money value goes down, you have to pay more money to get the same asset. So when we look at real assets, we are talking about house, real estate, we are talking about gold. Inflation in USA is right now at 7%. Turkish inflation is pegged at around 48.69% officially and 115% unofficially. And if you look at Sri Lanka, Sri Lanka has got an inflation rate which is at 14.2%. India is in a much more stable situation as at 4.5% inflation, and China is at 1.8% inflation, which is the very lowest. They have a problem where they have to decrease their interest rate to stimulate the economy. Mexico is at 6.2%, Brazil is estimated at 5.3%, and Russia is at 8.8%. So this covers the BRIC countries and the USMCA, that is United States, Mexico, and Canada. All this inflation is not yet reflected in the gold price, in my opinion. Earlier, gold was just a metal, historically, and used only in jewelry. However, now we have industrial applications such as application in dentistry, applications in electronics and computers and circuit boards, medical usage in orthotics and dentistry. Currently, almost 11% of gold produced every year is used in industrial applications. Earlier, it was just jewelry. Now it is also in industrial applications. Meanwhile, the supply of gold is finite, and the cost of mining is increasing because it uses cyanide in refining process. There are environmental costs and remediation costs in licensing for gold mines, and these costs are increasing rapidly. So now, since USA has already pumped trillions of dollars into the market, despite whatever tightening is going to happen going forward, and despite increasing the interest rate, the money supply is already at very elevated levels. So it will surely support higher gold prices. So in total, I think that as all these geopolitical and economic issues start resolving or getting worse, and how the Chinese work through their own economic crisis will determine the timing of the rise of the price of gold. And we have very elevated tensions right now in Ukraine, and if that tension somehow fizzled out in the next few days, that would delay the increase in gold price a little bit. But as we saw before, the BRIC countries, which form a major economic bloc, are also facing inflation, except for China. So we have to wait and see how these things resolve. If they all go for the worse, and with the increasing application of gold in industry, apart from jewelry, as we saw earlier, we are definitely going to have very, very strong gold price. So I would think that earnestly around June, we should start the prices of gold ticking up, and it will go up very slowly. And over the next couple of years, we are going to see it stop somewhere around 2,400 to 2,500. So I would like you guys to tell me what you think about the price of gold, whether you care about it at all, or it is just going to be CRISPR for you. So put your comments there. Let's have some interaction. Let me know what you think about this. And also let me know if you are interested in contents like this, which are outside of CRISPR, but still talking about economics and technical analysis and fundamentals. I would be really glad to produce more of those on weekends. So, and if you are here for the first time and you are someone who is following gold, please subscribe to this channel. I would be having a lot of interesting economic, geopolitical videos coming in here, along with technical and fundamental analysis. We'll be talking about crypto. We'll be talking about electric vehicles. We'll be talking about fintech industry, and also CRISPR on the weekends. So please put a thumbs up for this video if you like it. And thanks for being here. Thanks for investing your time, and have a great weekend. Bye for now.